Well, for more on President-elect Trump, his views on U.S.-China relations and their future, I spoke with Eswar Prasad. He's the Tolani Senior Professor of Trade Policy at Cornell University. I asked him about Trump's recent outburst against China and its possible impact on ties between Beijing and Washington.
Now, most of us hope that reason will prevail once Mr. Trump takes office. But remember, he's promised to bring jobs back to U.S. manufacturing, or at least to stop the bleeding of jobs abroad to lower wage competitors, not just China, but many other countries. Now, that can be done, but it's going to take a lot of work to improve U.S. productivity. Maybe you can spend more on infrastructure, put in place tax reforms. If done the right way, they can improve U.S. competitiveness. So there are many things that he's talked about that could improve U.S. competitiveness, but those are very difficult things to do. Those will take a lot of time to show results. It's a lot easier for Mr. Trump to pander to his base by appearing tough on China. So that's my concern, that the temptation to appear tough on China might well lead him into continuing to make statements even after he enters the White House. And that could lead to an escalating battle of tit-for-tat reactions from China, which in turn creates more actions from the U.S. So it could end up in a trade battle that nobody really wants, but which both sides are dragged into unwittingly.
Now, another thing that played well with Trump's base was his comments on taxes. And now, with his recent tweet firestorm, he said that China has been heavily taxing U.S. products while not taxing China, which is in fact not true. China does pay taxes, granted though at a lower rate. How do you see that rhetoric affecting trade?
Now, one could argue, as many of Mr. Trump's supporters have done, that what Mr. Trump is trying to do is set up a negotiating stance whereby he can do what American businesses really want from China, which is greater access to market opportunities in China, both to sell to the domestic market, but also to invest in China and to create more business opportunities there. So perhaps what we are seeing is just a negotiating strategy. And certainly this is what American businesses would like to see Mr. Trump focusing on, rather than the charge of currency manipulation. And there are many issues, not just market access, but also intellectual property rights, where I think the U.S. could have a much more productive discussion with China that would ultimately open more doors in China to U.S. businesses and could benefit the trade relationship in both ways. But currency manipulation is certainly not the right charge in order to make that point.
And in terms of actually having that cooperation and really having a more productive relationship, how do you think China and other trade partners are viewing this rhetoric that they're hearing?
It's certainly going to be very unsettling to many countries, because remember, even while the election season was going on, both China and the U.S. continued very gradually to negotiate the bilateral investment treaty, which would give both countries access to investment opportunities in each other's countries. So there is a lot of interest at the technical level in both countries in terms of deepening the economic cooperation. But you also need the political overlay of support from the leadership in both countries. And if there is a very frayed relationship at the top level, that's going to make it very hard to make progress at the technical level. And what is true with China is true with many of other trading partners of the U.S. as well. Mr. Trump has talked about tearing up the North American Free Trade Agreement with Canada and Mexico. And right now, there are many business interests that have very tight linkages among the three countries. So it would certainly hurt not just Canada and Mexico, but U.S. businesses as well. So I hope, again, that Mr. Trump, once he takes office, will have a more pragmatic approach to trade policy. That's what many of U.S. trading partners seem to hope for, but we'll have to wait and see.
And in terms of the industries that could be most affected by some of this trade talk that we're hearing, which ones really stand to be most impacted?
Now, if one thinks about U.S. exports to China, the services sector does export a fair amount. That includes Chinese tourists coming to the U.S., Chinese coming to the U.S. for healthcare. All of that counts as services exports. Plus, the U.S. agricultural sector does export a fair bit to China, as does the high-tech export sector. But it's not just the exporting sector that's going to get hurt. There are many companies like Walmart, Apple, that have very strong production bases in China, and the Chinese part of the supply chain, if disrupted, could affect these companies quite greatly. So the harm that could take place for many of the U.S. both manufacturers manufacturing and services sectors could be quite pervasive if there are rising trade tensions between the two countries.
And we're also seeing that China now invests more in the US than the US does in China. It's actually saw record highs this year. So with that being said, we're also seeing more scrutiny of some of these deals starting to increase. How do you think that's going to affect China's investment strategy going forward if they're seeing all this scrutiny and this increasingly contentious talk coming from the president-elect?
Now, China is certainly going to be looking to more investment opportunities, both for higher yields and also to get access to better technology that many American companies have. And the reality is that under the Trump administration, there is going to be a pattern of much greater scrutiny of Chinese investment. So at some point, I think China's government might well say, and also Chinese corporations might well say, it's not worth the trouble and go looking for investment opportunities abroad. But the reality again is that the US is the biggest market in the world, is an economy where there is a lot of technology that Chinese companies could acquire. So here again, I think both sides, the US and China, have a strong interest in keeping this relationship on an even keel. There are certainly going to be far more bumps in the road than there have been under the previous administrations. And again, I'm hoping that things can be smoothed out, but it is going to be a very rocky start, I suspect.